what do you think was the logic behind even considering tariffs on copper imports? Because it's an industrial metal, very important for new energy initiatives, very important for electricity infrastructure, very important for EVs.
Well, I think the logic, I mean, we don't have tariffs on copper yet. I think the logic is somewhat unclear. We take the examples of those where we do have it there on, say, steel and aluminium. In the case of steel, it is fair to say that there is potential for US steel production to increase, partly because you have a little bit of additional capacity coming online this year, and also because utilization rates of US steel mills could go up, as happened after the 2018 Section 232 tariffs came in place. In the case of aluminium, though, which in some ways is a better comparative to copper, we think the prospect of a meaningful increase in US production within a foreseeable time frame is very, very low. You could have some marginal production restarts from closed capacity, but to get fresh greenfield capacity being built within any short time frame is very, very unlikely. And so I think in copper, where you have that problem even in a bigger case, the chance that you get a domestic production response that changes the US trade balance is very low. And so I think the logic is really unclear to us as something that is likely to lead to a sort of renaissance in domestic production in the US.
I also want to get your sense in what does this mean for copper prices? Not the tariff risk. I mean, maybe that also. It's very hard for me to join the dots over here because that would also be inflationary for already high copper prices. And then other base metals are rallying away too. So how do you see the trend for base metals over here? And I'll come to the China angle later.
Sure. It's a very good question. I think there's some irony here in that the threat of a tariff, as we're seeing in the copper market at the moment, is bullish. The reason for that is because it creates a physically arbitrageable price difference between US prices that have a risk premium for an expected tariff and ex-US prices, so the LME market. And that means that on a physical basis, if you can buy at the LME price or close to it and sell at that US price, you've got an arbitrage that you can capture. So what we're seeing is a significant increase in demand for US deliverable material in the copper market that's currently outside the US to move that material to the US. So that actually is boosting near-term demand for copper. And so the risk premium that pushes up the CME price in the US therefore drags up the LME price with it. That's the main thing that's lifting copper prices at the moment. Conversely, once a tariff is implemented and that price difference is not something that is arbitrageable because it reflects a duty that you have to pay, or in the instance that there were no tariff implemented in copper, so therefore that premium in the US goes away, what you've done is you've brought demand forward. You've front-loaded demand. And after that tariff comes in, actually you find that demand therefore falls to below normal levels. So it's not boosting demand, it's bringing demand forward. And therefore, post-implementation of a tariff, or just tariff clarity, we would say that it becomes bearish. And I think if you add to that the fact that broader tariff implications, by virtue of being inflationary and therefore a problem for the consumer, and also challenging in terms of the uncertainty for business investment, mean that the likelihood is that actually they end up damaging real demand for a period. And so we think that there's this slight irony where tariffs in this phase of sort of being threatened or expected are bullish for pricing. As soon as you get clarity, however, they become bearish.
Exactly, which is why you're saying that at current levels, we think the price is more vulnerable to the downside. We're going at 10,000 for copper right now, LME copper, nearly 10,000, right? Where do prices go from here?
So if we go through an extended period of uncertainty around when the Section 232 tariffs in copper may come in, the price can keep pushing higher. But I would say in terms of that risk, on balance of risks, I think the skew is to the downside. And that in addition to that, it's worth highlighting that the amount of investor length in the copper market now is not dissimilar to that was seen around the peaks in the market in the second quarter of last year. So that if we find that clarity comes quite soon, and sooner than expected, given a lot of people in the physical market are positioning for maybe a 3, 4, 6 month even window of uncertainty, and that gets closed sooner than that, then you could have a significant liquidation in terms of financial market positions. And you could also see that physical positioning, people who are expecting to move material to the US, ends up having to be delivered into the LME and effectively dumped onto the exchange. And then you'd see prices probably falling back down towards $9,000 very quickly.